What is really happening beneath the surface of the choppy waves at this hour? And will it all force our Federal Reserve to pause its interest rate hikes at its meeting 1 week from today? Let's get to the floor show. We've assembled a very important group of voices. Former Federal Reserve Governor Bob Heller on the tight spot that the Federal Reserve is in now. Live from London, we have Zaye Capital Markets' Naeem, who traded through the European storm earlier today. He is also keeping a close eye on headlines out of Credit Suisse. And Solus Alternative Asset Management strategist, talking a lot here, Dan Greenhaus. Let's start with Naeem in London. Naeem, what's the latest with Credit Suisse?
Thanks for having me, Liz, as always. Look, there is still plenty of panic among traders over here because Credit Suisse is really a Lehman moment. It is too big to fail. And that is the reason that now, only now, we are hearing from the government, from the Squad government, which has pretty much agreed, let's just say that, to provide its support. Because without the support, the fallout from this particular bank was going to be absolutely immense.
Naeem, let me interrupt you there. So the European banks, not just Credit Suisse, have really stumbled. Earlier today, we can show the ones that are American depository receipts, meaning they're European banks that trade here in the U.S. We're talking about everyone from Deutsche Bank, BNP Paribas. You can put up HSBC. There are many of them. What is the latest, though? When you say support, are we talking about a bailout, a full-out rescue by the Swiss National Bank?
We don't know at this stage, and that is the uncertainty out there, because if that is the case, then I am sure Credit Suisse isn't going to be the only institute. We will be hearing from a large number of other institutes coming in the spotlight and asking for a similar sort of a support as well. But you are absolutely correct. All the European major banks, they are so much intertwined with each other and then holding balance from one bank to another bank. So the exposure is absolutely mammoth.
I want to bring in Bob Heller, former Federal Reserve Governor. Bob, up until, I guess, before the fall of SVB, the Federal Reserve was obdurately opposed to halting its interest rate hike trajectory. Will it, one day from today, be forced to pause?
I think when the house is on fire, it's appropriate to calm things down, not to increase interest rates at this very moment. But the long-term inflation fight is still on. So after a short pause to calm the waves, then the Federal Reserve has to combat inflation, which is still running at a very high rate, 3 times at what the Federal Reserve wants it to run. I would like to be down to 0.
Wait, well, hold on. Really? Down to 0? You think that we are in that situation that is such an emergency now that we need to go there?
Not right now, like I said. At the moment, keep it calm. Do not change interest rates at the moment. But the long-term fight against inflation has to continue. And Congress has mandated the Federal Reserve to have price stability. In my mind, that means no inflation, no price increases.
Dan Greenhaus, it sure looks like the markets are struggling to come back. They have come well off the lows. Dow Jones Industrials down 339 points after having dropped 725 points. Give me your assessment of whether, I know the answer to this. Is it safe and sound? I'm thinking no, but nonetheless, are there some cheap deals out here?
Yeah, I don't think it's safe and sound per se, but I also think some of the more hyperbolic statements being tossed about right now are just that, hyperbolic. I mean, a lot of this began, if not all of this began, with the failure of Silicon Valley Bank, SVB. I think there are a lot of idiosyncratic issues at work that made SVB the most likely, if not the only bank to suffer the fate along the line. That's not to say that Signature it didn't also fail, because it did, but what affected SVB ignited these concerns that who's the next one? Who else has unrealized losses? Who else is negative equity if you account for all the off-balance sheet items? And I know there's a lot of worry out there. People are rushing to take their money out of their own bank and put it in some of the bigger banks. I'm not saying that that's totally imprudent, but what I am saying is some of the worst fears in the market right now are probably unlikely to be realized.
Okay, that is certainly good news. However, Dan just articulated, you guys, about how the Federal Reserve had moved rates so quickly after having been down so long. And I think it's important to point out German bonds, German treasuries, as they are known, the Bunds, had been yielding negative, meaning the government government would pay you just to hold your money. So, Naeem, what kind of exposure do the European banks have to those types of older, I guess, yields, just like SVB had?
It is absolutely humongous. But one thing that is quite different between the Federal Reserve and the ECB is that the ECB is still very much in early stages of increasing those interest rates at the fastest pace that the Federal Reserve has done. But here is something which is absolutely annoying about lawmakers. They are always behind the curve. They're always chasing the curve. Rather than using the diagnostic tools while they are fine-tuning their policies so that they can avoid such fire and then bringing out the fire hoses to put off those fires, they should be using the diagnostic tools at a much earlier stage to avoid them. Because what is happening is they're trying to put off the fire in one place and then the fire emerges at another place.
Yeah.
And then there's just this constant lag from these lawmakers.
All right, we got some breaking news. I told you this was going to be the earth moving beneath our feet. I said that Monday. It continues to do so. On the right-hand side of your screen, you can see that Credit Suisse has just fallen a bit from the $2 a share. Once again, that we started the hour at, it's at 198 at the moment. You know, it's such a cheap and battered stock that equals a drop of 21%. This is hitting the tape. And Naeem, listen to this. A Swiss member of parliament, Thomas Matter, says there is currently no discussion of state aid for Credit Suisse at the moment. What does that mean for trading in Europe tomorrow in not just Credit Suisse, but European banks?
Contango is the word which comes to my mind.
Okay, explain what that is.
Exactly, when the forward curves are trading at a much higher rate than the long-term curves, which you've mentioned right at the top of your show as well. You were referring to that. So I think that is what's going to happen. Credit default swaps are going to skyrocket going into tomorrow. We do not need such statements. We need a surety from the lawmakers. And that is what traders and investors really wanted to hear.
And Bob Heller just said that's what this market here in the United States needs to see is calm. But if we look at the yields on treasuries, they have started to punch back up a bit higher. And that, of course, means that more people are, well, maybe it means that some people will look at them and say, oh, I missed an earlier high yield. These yields are coming back. And Bob, does that mean that they will pile into treasuries because that right now is the safest bet going?
Well, that's always the safest bet going. But you see, the Federal Reserve itself has been doing that for the last year. They have been investing in long-term treasury securities, and they lost a lot of money on these long-term treasury securities. The Federal Reserve has assets of about $8.6 trillion on the balance sheet. It has, liabilities of about $8.6 trillion. It has assets of 7.4, and so it has a negative net worth of about $1.1 trillion because it did exactly the same as Silicon Valley Bank did. Or let's put it the other way around. Silicon Valley Bank did exactly what the Federal Reserve did. And therefore, they both took the losses as interest rates went up, bond prices went down.
And now we are seeing the yields extend their fall. The yields are moving under our feet. Dan Greenhaus, let me read you this headline. Treasury yields are extending their fall after that Swiss official, the story that we just brought you, said that there is no support there. But the Swiss National Bank, another member of parliament is telling Reuters, I wouldn't be surprised if the Swiss National Bank makes an announcement on Credit Suisse by Monday morning. That's days from now. So between now and then, U.S. stocks, S&P's a lot cheaper right now. Do you go into just a basic index fund?
Yeah, I don't know what's going to happen in the next 3 days, and I don't think anybody does. What I would say, in contrast somewhat to what Naeem said earlier, this bank's not going to fail without government support. Credit Suisse. This has been a slow motion locomotive for the better part of a year or two, or even more. The stock was 15, then it was 7, and now it's 2. So it's not as if everybody's not aware of problems in many European banks. Obviously, we're talking about Credit Suisse right now. The idea that Credit Suisse would be allowed to quote unquote fail without the Swiss national government stepping in some capacity is I would argue, farcical. And when you hear people in the government saying there's no discussions at this time, that just may mean on the phone with you that I'm talking to the reporter. We're not talking about it right now, but 5 minutes from now, when we go into the back room, we will be talking about it. And that's, I think, likely to be what happens.
All right. Fox Business has reporters fanning out on all of these angles. We want to thank Dan Greenhaus, Robert Heller, and Naeem Aslam. Naeem, I know you'll interrupt us if you start to see futures when they open and move, and please keep us posted on what's going on in Europe. Look, as we look at what's happening to Credit Suisse, it is now at about $1.98. When we started the top of the show, it was $2. This is the reason we have that on the bug, because that Swiss bank is in distress, and depending on what or what does not happen, whether government moves in from the Swiss National Bank, that may make a difference to any sort of earthquakes or tremors that we feel here.